You're scrolling listings at midnight. Every house that doesn't look like it's about to collapse costs $500,000. Laminate countertops from 2003. Beige carpet. The agent calls it a starter home. And you're sitting there doing mental math on your salary, wondering if you missed something. Spoiler, you didn't miss anything. The math is just brutal. Today, we're going to do something real estate agents hate. We're going to calculate who can actually afford a $500,000 house in 2026. Not who the bank approves, who can genuinely afford it without turning their life into a financial stress simulator. The median household income in America is $84,000. We're asking people making $84,000 to afford homes, costing 6 times their annual income. If that ratio sounds insane to you, good. You're paying attention. Let's start with the down payment. The standard 20% down on a $500,000 house is $100,000 cash. The median savings account in America has around $8,000 in it. You're not a little short. You're $92,000 short. And if you save 10% of your gross income, which almost nobody does, it takes 12 years to save that down payment, assuming prices don't rise. They will. So you skip 20% and put down 5 or 10 instead. Congratulations, you just unlocked PMI, private mortgage insurance. This is the monthly fee you pay for the crime of not being wealthy enough to put 20% down. It protects the bank, not you. Anywhere from $200 to $400 a month, every month. Now the actual payment, you put down 10%. $50,000 scraped together. That leaves a $450,000 loan. At 6 to 7% interest, your monthly mortgage is around $2,800. That is just principal and interest, not a single other thing. Add property taxes, around $500 a month. Homeowners insurance, now higher than ever, another $300. Maintenance. The rule is 1% of home value per year. On a $500,000 house, that is $417 a month, plus PMI at $300. Total monthly housing cost, around $4,370. Here is where it becomes real. Financial advisors say do not spend more than 28% of gross income on housing. If $4,370 represents 28% of your income, you need to earn $187,000 a year. Using the more lenient 43% rule, you still need $150,000 annually. Only 10 to 20% of American households earn $150,000 or more, which means 80% of American households cannot comfortably afford a $500,000 house under any reasonable financial standard. This is not an opinion. This is math being cruel. Now meet a household making $160,000 combined. Well, above median, solidly upper middle class, they should be fine. After taxes and a modest $401k contribution, they take home around $9,500 a month. Subtract that. $4,370 in housing. They have $5,130 left for everything else. 2. Car payments. $800. Car insurance. $250. Gas. $300. Student loans. $600. Health insurance. $400. Groceries. $800. Utilities and phones. $450. They have $1,530 remaining before clothing, kids, activities, medical bills, car repairs, entertainment, savings, or emergencies. This household earning $160,000 is spending 46% of take-home pay on housing. And they are not irresponsible. They are just trying to live in a house the market tells them is normal. Here is what that feels like daily. Checking your account before buying groceries. Saying no to your kid's field trip because that $35 might be needed. Lying awake at 2 a.m. deciding whether you can afford new tires this month. Being one unexpected expense away from disaster. Always. The HVAC breaks. $5,000 you do not have. Someone rear-ends you, and your deductible is $1,000. Going on the credit card. Your kid needs braces. Financing. Dental work like a car. This is the reality for households earning $160,000 trying to own this house. Imagine what it looks like for someone earning $84,000. At median income, A $500,000 house is not tight. It is not stretching. It is mathematically impossible without massive external help or accepting a level of risk that would make a skydiver nervous. Nobody in the transaction has an incentive to tell you that you are about to financially drown yourself. The bank profits on the mortgage. The agent profits on the price. The insurance company profits on the policy. Nobody makes money when you walk away. So here is the actual truth. There is no prize for buying a house you cannot afford. There is no trophy for being house poor. The stress of barely making your mortgage payment every month will erase any pride you felt the day you got the keys. Real wealth is not equity you cannot access because you are trapped by the asset that is supposed to make you wealthy. Real wealth is margin in your budget, the ability to invest consistently, sleeping at night without calculating whether you can cover next month's payment. You are not failing at adulthood. You are doing math that apparently nobody else wants to do. The bank's risk tolerance and your ability to actually live a life are not the same calculation. Find the number where you can pay the mortgage, handle maintenance, save for emergencies, invest for retirement, and still occasionally remember what it feels like to not be stressed about money. For most people, that number is nowhere near $500,000, and that is completely fine. Subscribe, because most people never run these numbers honestly. You just did.